We are continuing with our training. And good morning, everyone. Once again, this is Coach Mopiwa joining you from Johannesburg. So we have entered second week of our training, where we started from the beginning of our syllabus after it was completed. So now we continue from where we left last week. All right, we left last week. If you can hear me, can you give me one in the chat? If you can hear me, kindly give me one in the chat. You can hear me, kindly give me one in the chat. If I'm audible, kindly give me one in the chat. If I'm audible, please give me one in the chat. All right. Okay. Thank you so much. Okay, so we are going to proceed from where we left last week. But before we do that, for recap purposes, let's find out to those who have been attending. To those who have been attending, yes, when we started our new week in terms of training, I just want to find out if we are still on the same page. So we looked at TradingView app. We navigated through the TradingView app, and then we started looking at candlesticks. We started looking at candlesticks on our TradingView application. All right, so I just want to see if we still remember what we learned last week. Yes, if we still remember what we learned last week. All right, so last week we opened up about a candle. We did find out that a candlestick is used as a visual representation of what is happening in the market for us to be able to understand the behavior, all right, the behavior of buyers and sellers in the market. Then the tool to use to measure that, it is a candlestick. Now we discovered that there are too many players. Yeah, there are too many players in the financial market. There are too many players that are in the market. All right. If you remember very well, what did we say? Those too many players in the market. What are the too many players of the market? What are the too many players of the market? If you remember and you were here, we spoke about two forces that controls the market. Two forces that controls the market. What are those two forces? What are those too many players? What are those too many players? Thank you so much. Buyers and sellers. Okay. All right. So we also said that buyers, as part of the market players, they normally participate by opening price. They normally participate by opening the price of the market. Then we said that buyers, they normally open from somewhere when they want to enter the market. What did we say? When buyers are opening price, where do they open it from? When buyers, they are opening price, where do they open it from? Where do they open it from? Where do they open it from? Buyers, when they are opening the market, where do they open it from? Where do they open it from? Okay, thank you so much. They normally open it from the bottom. All right, they normally open it from the bottom. Okay, then we looked, depending on what we are getting here, then we looked that a candle that is controlled by two players, which is buyers and sellers. All right, we discovered that it has got parts. Okay, we discovered that it has got parts. All right, so I want you to tell me, all right, what is the filled part of the candlestick cord? What is the filled part of the candlestick cord? What is the filled part of the candlestick called? What name is given to the filled part of the candlestick? What name is given to the filled part of the candlestick? Wow, wow, wow. Okay. Now you are giving me confidence. You are giving me confidence. Yes, to those that are responding. Thank you so much. Yes, the body, it is the filled part of the candlestick. Yeah, the body, it is the name given to the filled part of the candlestick. All right. Then we also discovered that there are some thin lines poking above and below the body. We discovered that there are some thin lines poking uh, poking above and below the body of the candle. What name is given to these thin lines? What name is given to these thin lines? What name is given to these thin lines? The thin lines that are poking above and below the body of the candlestick. What are they called? What are they called? What are they called? Wow. Wow. Thank you so much. This is amazing. This is amazing. Yes. They are called wicks. They are called tails. They are called shadows. All right. It is the same thing. Thank you so much. I really appreciate that. I really appreciate that. Okay. Now, on the body part of the candlestick. On the body part of the candlestick. Yes. What name is given? What name is given? What name is given to the bottom of the lower shadow? What name is given to the bottom of the lower shadow? Or what name is given to the lower part of the body? What name is given to the lower part of the body of the candlestick? What name is given to the lower part of the body or the shadow? Yes. What name is given? What name is given? What name is given? What name is given? Thank you so much. Thank you so much. Yes, that is the law. That is the law of the candle. Okay. Someone is saying is not seeing anything. We are not sharing screen here. Probably you have just joined us. You have just joined us. Okay. So today we are going to pick it from there. Today we are going to pick it from there. Remember, we did what we call body sizes of the candle, right? We did what we call body sizes of the candle. We did long bodies and short bodies, and we find out what do they give to us as the traders. What information do they carry? All right. So we started after we did shadows. After we did shadows, okay? After we did shadows, we discovered that shadows, they carry very important information when it comes to trading. All right. Shadows, they carry most important information when it comes to trading. All right. So I just want to find now on the shadow part, on the shadows part, if you did pick anything when we were talking about shadows. All right. So we discovered that shadows, they can be long or they can be short, but we were looking at long shadows. Okay, we were looking at long shadows. When a shadow is found on the upper part of the body, it is called an upper shadow. When it is found at the lower part of the body of the candlestick, it is called a lower shadow. All right, that's what we said when we were talking about shadows. Now, I just want to pose a question here. If a candlestick has got a longer upper shadow, if a candlestick has got a longer upper shadow and a shorty lower shadow, what does that mean? What does that mean? What does that mean? Who pushed the price? Who pushed the price? Who pushed the price? What does that mean? Who pushed the price? When a candle is having a long upper shadow and a short lower shadow, what does that mean? What does that mean? Yes, what does that mean? What does that mean? Who pushed the price? Who pushed the price? That's what I'm looking for. The answer should be in connected with who pushed the price. Who pushed the price? Who pushed the price? I don't want to know who is in control, but I want to know who pushed the price. If a candle is having a long upper shadow, all right, and a short lower shadow, who pushed the price? Who pushed the price? Who pushed the price? Yeah, this one is a bit confusing. Some they are saying sellers. It's not sellers, it's buyers. It's buyers who pushed the price. All right, it's buyers who pushed the price. Okay, thank you so much, guys. I really appreciate. I can see that we are still together, so that when I start today, then we are still on the same page. Okay, so we said that I'm not sharing screen. There are people that are saying they are not seeing anything. I'm not sharing screen. I haven't started sharing my screen yet. All right, so we said that in the process, all right, in the process of candle formation, you are going to find out that a couple of candles have been formed. Okay, in the process of candle formation, you will find out that a couple of candles have been formed, and they form what we call a pattern. Okay, they form what we call a pattern. Now we said that a pattern, it is a language of the market. Okay, a pattern, it is a language of the market. I was giving an example that imagine you have relocated to a new country. You are not a citizen of that country. Neither do you understand the languages that are spoken in that country. All right. How confused are you going to be in the first time you arrive in the country? Understanding that you don't understand the language being spoken there. All right. So we said it is the same when you don't understand the language of buyers and sellers when they are communicating in the market. So the only language that buyers and sellers communicate in the market is a pattern. So when you are able to understand a pattern, when you are able to read different types of patterns that are created in the market, you will be able to know which direction the market is going, okay, and which direction the market is coming from. All right. So you are able to predict what is going to happen probably from now. When you look at what has transpired, where it is coming from, where the market is coming from, you are able to see probably what is going to be the next move, because you are able to read and understand the language, which is the pattern. All right. So today we are going to look at different types of candlestick chart patterns. All right. These are the most likely chart patterns that you are going to find in the market. These are the most likely chart patterns that you are going to find in the market. All right. So I'm sure that your pens and your books are ready to write some notes on this one. Okay. Don't forget that when we are learning, we are also earning at the same time. All right. Yes. When we are learning, we are also what? We are also earning at the same time. So they are signals that are dropped in different types of our WhatsApp group where we belong. All right. Including our Telegram channel. So don't forget to check. All right. There are signals being dropped in our groups. Make sure that you attend to that, so that while you are learning here, you are also able to aim. All right. So let's get into candlestick chart patterns. That's our starting point today. I already defined what are candlestick chart patterns. All right. Yes. So today we are going to look at some of the candlestick chart patterns, but we're going to look at the most likely candlestick chart patterns that you are going to find in the market. All right, we're gonna look at the most likely chart candlestick chart patterns that you are going to find in the market. Okay. All right, so if we are still together, give me one in the chat. If we are still together, give me one in the chat. If we are still together, give me one in the chat. If we are still together, give me one in the chat. Crypto Ambassadors. Crypto Ambassadors is the name of the Telegram channel. Crypto Ambassadors is the name of the Telegram channel. All right, that's the name of the Telegram channel, Crypto Ambassadors. Okay, so I'm going to share my screen, then we go into our candlestick chart patterns. All right, our candlestick chart patterns. I'm gonna open and share my screen. I'm gonna open and share my screen, then we go into candlestick chart patterns. All right, we're gonna go into candlestick chart patterns. Okay, so let me share my screen, then we get into it. Let me share my screen, then we get into our candlestick chart patterns. Our candlestick chart pattern. All right, just a moment. I'm trying to open my slides so that we don't take long. All right, let me share my screen now. Okay. Can you see my screen? Can you see my screen? If you can see my screen, give me one in the chat. If you can see my screen, give me one in the chat. If you can see my screen, give me one in the chat. If you can see my screen, give me one in the chat. If you can see my screen, give me one in the chat. If you can see my screen, give me one in the chat. If you can see my screen, give me one in the chat. If you can see my screen, give me one in the chat. Okay, so let's start from here. I was saying that candlestick chart patterns, they are a language of the market where buyers and sellers used to communicate. So you're going to find out that these candlestick chart patterns, they are divided into two. Okay, you need to understand me here so that you are able to put them together. These candlestick chart patterns, they are divided into two. Since we do have two dominating powers, okay, we do have two dominating powers, which are buyers and what? And sellers, okay, which are buyers and sellers. These are the two forces that dominates in the market. So we are going to look at chart patterns that are spoken by buyers, meaning to say these chart patterns, they are the ones when you see them, the market is going to move from the bottom to go to the top. Okay, they are reversal signals to the top. Okay, when we are looking at these types of chart patterns, we're gonna look at chart patterns that are created by buyers or that signify market reversal signal to the upper side, meaning to say these are buyers that are pushing price to the top. Remember, buyers, they open the market from the bottom and they push the market to the top. Okay, so when you see these types of market reversal signals to the top, it means that they are created, or it is buyers that are speaking the language, all right, So those types of market reversal signal to the top, okay, normally they are classified into these two that we are going to look at, okay, to the top and to the bottom. All right, so we are going to look at market reversal signals to the top, and we're going to look at market reversal signals to the downside, which is sellers. Okay, so you need to understand that in the beginning, that when we go deeper, you should know that when we say a reversal signal, or when we say a chart pattern, what are we referring to? We are looking at a language either spoken by buyers, meaning to say price is going to go up. When the sellers are talking, it means price is going to go down. All right. So those are the two things that you needed to put into perspective when we go and classifying these two types of market reversal signals, or called chart patterns. Are we together? So we are going to look at this now. Let's start here. What you are seeing on your screen, it is called an engulfing bar. Okay, it is called an engulfing bar. All right, so you need to understand what is to engulf. All right, what is to engulf. All right, so this engulfing bar, it is a reversal signal. All right, it is a reversal signal, but the moment it is given a name to be bearish engulfing bar, it simply tells you that these are bears that are moving the market. If you were here on the first day, I was saying that you are going to hear the word like bulls, and you're going to hear the word like bears that are going to be used in our training. These are terminologies that we use in the crypto space. All right. So the moment you see the word bearish, it means it is coming from the word bear. Okay. So if it is a bearish engulfing bar, it simply means it is a market reversal signal to the downside. Okay. Because bears, they are sellers. Okay. Bears, they are sellers, as I said earlier on when we started. All right. So a bearish engulfing bar, it is a market reversal signal to the downside. Okay. A bearish engulfing bar, it is a market reversal signal to the downside. Okay. If you have gotten that, let me know. If you have gotten that, let me know. All right. A bearish engulfing bar, it is a market reversal signal to the downside. This is one of the most important candlestick chart pattern that you are going to see in the market. All right. This is one of the most important candlestick chart pattern you're going to see in the market. Now, when you look at this, you are going to find out, you will find out that the candlestick pattern consists of two bodies. Consists of two bodies. Remember, this is one body and this is another body. We are looking at a candle per se. All right. So a bearish engulfing bar consists of two bodies. Now, I want you to listen to me attentively here when I am giving information about these two bodies that you are seeing on your screen. Okay, so I said that this white candle, when you are seeing something white on my screen in the slides, it means it represents buyers. It is a candlestick for buyers. When you go to your trading view, this candle is green. Okay, it is green. All right. So this black candle, it represents sellers, which are the bears. All right. When you go to your trading view, this candle is red in color. All right. So I want you to see the position of this white candle, which is a green candle in trading view. All right. Yeah. I want you to see the position where it has been positioned. And I want you to see where this also has been positioned. So when I say that a bearish engulfing bar, it is a market reversal signal to the downside. What does that mean? It simply means the market is coming from the bottom going, it has gone up. Okay? It is coming from the bottom, it has gone up. So it has reached that top, which we call the resistant line or resistant level. Okay. So you can see that there are two bodies here that we are able to see. Okay. So you can see that this body is closing up this one, meaning to say it is engulfing this one. When we say engulf, it is to close or to swallow. When you are standing this side, you want to look ahead. You're not going to be able to see because this candle is longer than this other candle, or this one is bigger than this other candle. So in this case, this one is engulfing this one. But I said, I want you to pick something. When I say it is bearish, it means the market is going to change direction. It may not change now. It may not change immediately. No, sometimes it may not change immediately the direction. But this tells you that the market might change direction because the market is coming from the bottom here. It has reached that upper part called the resistant level. Okay, so this part, it is called the support level. Remember, we normally deal with this. If you are new, just be patient. You're going to understand what is resistant and what is support. But to those who have been here, they understand when we are using the word resistant and support. So the market is coming from the support level going to the resistant level. Okay, it is going to the resistant level. Then you see this type of a formation of candles. Okay, you see this type of a formation of candles. It simply means that the market might change direction. This is what we call a reverse. When we talk of a reverse, we are looking at a 100% reverse. We are looking at a 100% turn out. Okay, that's what we are looking at. So when we say the market is reversing, it means it has moved from 0 to 100, or is moving from 100 back to 0. That's what we call a reverse, not a retracement, not a retrace or a pullback. No. But when we are looking at a reverse, it means the market is doing 100% turn. Are we together? So these are the things that you needed to pick. First, you needed to understand this candle and this candle. So the bearish engulfing bar consists of two bodies. The first candle, it is a small body candle, as you can see that. The first candle, it is a small body candle. All right? Yes, you are going to see that it is a small body candle compared to the second one. So when it is like this, it simply means, or in other ways, the second body engulfs the previous one. As I've already said, the second body engulfs the previous one. Okay, so you can see that this candle has engulfed this one. So you see the market is coming from this direction from the bottom. So this candle, because it is small, it is telling you that the guys who have been pushing this price to the top, their power is becoming small and small in the market. Remember, I said, if you remember very well, what did I say about long bodies and short bodies? We were talking about pressure. Do you remember? So I said when a candle is having a short body, it means the pressure is what? Is low. Okay? When a candle is having a long body, it means the pressure is strong. All right? So you can see this candle is having a small body. This one is having a big body. What does that signify? It means the power, the pressure that is coming from this side, it is coming small and small. In that case, these guys, they are going to lose control soon. Their presence in the market is going to be outnumbered by this other group. That's why you see this one engulfing this one. Yes, anytime from now, any moment afterwards, you see the market is going to change direction. But remember the things that I'm talking about. This should be a bearish engulfing bar, a market reversal signal to the downside. Are we together? A market reversal signal to the downside. So you are going to see the bearish engulfing bar when the market has moved from 0 to 100, meaning to say this is area of resistance and this is area of support. Are we together? Yes. So you are going to see when the market is nearing the resistance level, you are going to see the presence of this type of a chart pattern. All right. If it is not this one, you're going to see another one that we'll be looking at. We will be looking at. But I just want you to know that there are different types of chart pattern. If you don't see this language, you are going to see another one that we are going to talk about. So the market is nearing the resistance level, then there is high possibility that sellers are going to resist price, then price will go downward. A reversal to the downside is going to take place. A reversal to the downside is going to take place. Okay, I'm looking at this so that you are able to pick what I am talking about. Okay, I wanted to put this slide here so that you are able to see what we are talking about. Okay, I wanted this slide over here for the bearish engulfing bar. Okay, I wanted the bearish engulfing bar, this one. That's what I was looking for. All right, so that you are able to understand when I say the market is coming from the bottom going to the top side. Can you see the formation of candles here? Can you see what happened here? The market is coming from the bottom going to the top. So we are assuming that this is our resistance line, and probably on the bottom side here, there is our support. So the market has moved from 0 going to 100%. All right. So we see the formation of these two types of bodies happening. Then afterward, we see a turn. We see a reverse to the downside. So this is how a bearish engulfing bar looks like in the market when you go to your trading view. All right. When we're going to have time after we have completed all our chart patterns, then probably we can make a navigation to different types of chart patterns that we may see in our trading view. All right. But this is the theory. I just want you to pick one thing here. All right. So this is how it looks like. Alan, stop writing on my screen. Okay. So this is a bearish engulfing bar. Anyone with a question, or are we following? Let me get a yes in the chat if you are following. Can I get a yes if you are following? I have spoken too much on the bearish engulfing bar, trying to paint a good picture so that you understand. On the bearish engulfing bar, it's a market reversal signal to the downside. Who is in control? Sellers. When you see that, you should know that buyers, they are losing momentum. Sellers, they are taking over from buyers. Okay? Buyers, they are losing their power. Sellers are taking over. That's what it means. So the market has moved from the bottom going to the top. Are we together? So let's go and look at the opposite. If bearish means sellers, if bearish means sellers, what is the opposite of bears? What is the opposite of bears? What is the opposite of bears? Give me an answer in the chat. If that was bearish, what do you expect the opposite of bearish? What do you expect to be the opposite of bearish? Thank you so much. So we're going to look at bullish engulfing bar. We're going to look at bullish engulfing bar. Okay? That's what we are going to look at. We're going to look at bullish engulfing bar. All right? We're going to look at bullish engulfing bar. Okay? Where is my bullish engulfing bar? I think it should be on the top here. They are just mixed up. All right. So this is a bullish engulfing bar chart pattern. So can you see now the opposite? Can you see now the opposite in this case? Can you see where is the bullish candlestick side? Can you see? Can you see which one is engulfing which one here? Which one is engulfing which one here? Because I can get answers if you are understanding what I'm teaching now. When you look at this chart pattern, which direction of the market is this coming from? When you look at this chart, when you look at this type of a candlestick chart pattern, which direction of the market is it coming from? Which direction is the market coming from? Which direction is the market coming from? When you look at that, give me an answer in the chat. Which direction is the market coming from? Which direction is the market coming from? Which direction? Which direction is the market coming from? Oh, come on, come on, come on, guys. Come on, guys. Really? Is it coming from the bottom? Really? 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 When the market has gone down, what do you expect? Which next trend is going to come? When the market has gone down, what do you expect the next trend? Is it going to be a downtrend again, or is going to be an upward trend? That's what I'm looking at here. So here, the market is coming from the top. Remember in that one, in that other slide, okay, this candle was a big candle. This candle was a big candle. This one was a smaller candle. All right. So in this chart pattern, it is simply that the market is coming from this direction. That's where the market is coming from. That's why this candle is becoming small, meaning to say whoever is in control of this market. Yes. If you see this black candle, you know who is in control, right? Who is bringing the market from that side. So sellers here, they are losing momentum. Yes, they have been pushing the price, pushing the price, pushing the price, pushing the price up to the bottom. Now the market is going to be supported. Remember, it's coming from resistance level. Okay? So sellers, they have been pushing, fighting the buyers to get out of the market. But buyers, they are still resisting. They said, yes, we are small in number, but we are not leaving the market. So sellers, they have been outnumbering buyers. That's why they were able to push the price to the bottom, because the amount of buyers in the market was not equal or was not able to outstand the amount of sellers in the market. That's why sellers, they were able to push the price to the bottom. Okay? So when they were reaching this bottom, which is called the support, their number, okay, their power started to become less. Okay, their selling pressure started to become less. I told you that buyers, they are always opportunists. Yes, buyers, they are always opportunists because they want to buy low and sell high. So buyers, they will always wait price to come down. Yes, they will wait for price to come down. That's what me and you do. Whenever we want to enter the market, we will enter from the bottom as low as possible. So buyers, they have seen an opportunity. After the market has been trending down, then they said, I think this is the right position to what? To enter. So buyers, they will come in large numbers and start entering the market after they have seen that sellers now, they have sold enough. Now the commodity, the asset has become cheaper. Then buyers, is when they start coming to enter the market and join the ones that were already there. Then you see that now power for buyers has been increased. As a result, sellers, they will start to lose their momentum in the market. then buyers, they take over. That's why you see the significance of this candle that is swallowing this one, meaning to say this one is engulfing this one, meaning that the market is going to change direction to the upper side. It has reached the bottom side. If you are able to connect with your RSI indicator, you are going to see that sellers, they have reached the oversold area. They have reached the oversold what? The oversold area. Yes, you're gonna find out that your RSI is right here at the bottom. Sellers, they have reached what we call the oversold area. Now the market is going to make a U-turn to the top. That's why you see this type of a formation coming. So this bar is engulfing this bar. This candle is engulfing this candle. Okay? Yes. That's why we are calling it bullish, because the market has been trending downward. It is for time for it to go to the upper side. In crypto, we says whatever goes down must go up. Whatever goes up must come down. That's what we are trying to do here, guys, understanding the language of the market. Does it make sense? Does it make sense to you? Does it make sense to you? Does it make sense to you guys? Does it make sense to you guys? Can you see how the bullish engulfing bar looks like in the market? Can you see the direction of the market? Can you see the direction of the market? Then this candle is swallowing this one after a downtrend, right? Yes, 100% down. And then you see the market changing direction to the upper side. So you need to pick another point here that is going to help you understand this better. Okay? For you to understand this better, you should have that line over here and you should have this line over here. This one is your resistance line. This is your support line. For you to identify this, you should know, or you should be able to see that sellers, they have reached the support. So in most cases where these market reversal signals are happening, you will see that there are areas whenever the market touches, it is either resisted or it is supported. If you have been here, you understand the language, what I'm talking about. Okay? Where these reversals are taking place, when you check it out, you will discover that previously when you check backward here, you will see that at this point, the market was supported, or at this point, the market was resisted. When you check back history here, where the market is being resisted, previously it was also what? Resisted. If it is on the bottom where the market is being supported, when you check backward here, you will see that is somewhere at the same level the market was supported. So it is a strong place. When the market reaches, there is a reaction to it. Okay, so probably there might be a turn to the upside if the support is not going to be broken, because sometimes the market can break the support. Sometimes the market can break the resistance. Okay, so you just need to keep watching out what is going to happen. Remember, there are rules that we follow before we make any entry to the market. When we have seen this, before we make any entry, there are rules that we follow. I'm sure if you have been here, you are able to understand. You are able to understand. Yes, Leader Julius have been teaching us. All right, teaching us that a candle should come from the bottom and close on top of our line. And then a testing candle should come. After the testing candle, then you will know that this is not a fake out. This is real. I can enter the market. So it's not just about this formation only. There are other rules also that you need to follow for you to know that indeed this is not fake, but it is original. it is original. Can I get one in the chat if I'm still with you here? Can I get one in the chat if I'm still with you here before I go to the other chart pattern? Are you following, guys? Bearish and bullish engulfing bars. Those are market reversal signal. One is for the top, one is for the bottom. One is for the top, one is for the bottom. Okay, now, so if you happen that you are not seeing a bullish engulfing bar, if it happens that you are not seeing a bearish engulfing bar, what other market reversal signal can you find? What other market reversal can you find? Okay, what other market reversal can you find? If you are not seeing a bullish, if you are not seeing a bearish engulfing bar, what else can you find? What other market reversal signal can you find? You are going to find this other market reversal signal called a doji candlestick. A doji candlestick. All right. If you don't see the bearish, if you don't see the bullish engulfing bar, or if you don't see engulfing bars, it's just that they are divided into two. If you don't see engulfing bars, you are going to see dojis. You're going to see what? Dojis. So dojis also, we are going to classify them into two. But first, you need to understand what is a doji candlestick chart pattern. All right. What is a doji candlestick chart pattern? So a doji is one of the important candlestick chart pattern that also you need to take note of when you are navigating the market. When you are trying to analyze the market, please take note that a doji is also the most important candlestick that you need to have a look at. When the candlestick forms, when this type of a candlestick is forming, it tells us, okay? It tells us. Where is my cursor? I need to do some writing here. Okay. When this type of a candlestick chart pattern is forming, it tells us that the market opens and closes at the same price. Remember, we are looking at price opening. We are looking at price opening. When price opens, where does it go? Does it go up? Does it go down? That's what we are monitoring here, so that we find a place to enter for us to win a trade. So when you see a doji candlestick chart pattern, the information that it communicates to you, it tells you that where the market opens is also where the market closed. Can you see? This is the opening price. Can you see where the market opened? It happens that where the market closed, it also being the same. Have you ever seen something like this in trading view? Have you ever seen something like this in trading? If you have seen it, give me yes in the chat. If you have seen something like this as a part of a candle, give me yes in the chat. So I'm saying that when it comes to a doji, the opening price and the closing price, they are at the same. So when opening and closing, they are at the same. What does that mean to you? If the power, because if buyers and sellers, they are opening and closing at the same place, what does that mean to you? It means their power is equal. So there is equality. Okay? There is equality. When price opening and price closing is meeting at the same place, there is equality in the what? In the market. So if there is equality in the market, if the power of buyers and sellers is equal, can you know which direction the market can take? Can you know? Give me an answer in the chat. If there is equality in the market, The power of buyers and sellers is equal, meeting at the same place. Can you know which direction the market is going to go? Whether it's going to go up or whether it's going to go down. Can you know? You're not going to be know. I mean, you're not going to be able to know. So this means that there is also indecision. Indecision. Okay? Indecision in the market. If there is equality, there should be also indecision. It means nobody has decided which direction the market is going to be. It's like they are doing 50-50 in the game. There is 50-50 in the game. The power is being shared equally. So when you see a doji forming, you should understand that there is equality in the market, because the equality brings indecision. Nobody has decided. So you just keep on watching what is going to happen next. But this signifies something. When you see this, signifies something. What did I say about shadows? When shadows are being formed, what did I say? If you remember, when I spoke about shadow formation, what did I say? Shadows signifies pressure. Okay? Shadows signifies pressure. It can be a buying pressure, it can be a selling pressure, one of the two. So when you see shadows forming, you should know that there is pressure in the market, but this pressure haven't been decided. Is it for buyers? Is it for sellers that are going to take over? But at this very moment, there is equality of the pressure in the market. The pressure for buyers, the pressure for sellers is equal. So equality is equal to indecision. Give me a 1 in the chat if you have understood that. Because now I want us to go to their types. But you need to know before, when you see a doji, what does that mean to you as a trader? When you see the formation of dojis coming up, what does that mean to you? All right. So give me 1 in the chat if you have understood a doji before we go to their types. Give me a 1 in the chat if you have understood a doji. If you have understood a doji, give me a 1 in the chat. If you have understood a doji, give me a 1 in the chat. If you have understood a doji, give me a 1 in the chat. Give me a 1 in the chat. Yes, give me a 1 in the chat. If you have understood a doji, give me a 1 in the chat. If you have understood a doji, give me a 1 in the chat. Okay. All right. So let's proceed. Let's proceed. Let's proceed. So can you see that plus sign? It looks like it's a plus sign, or it looks like a cross. Sometimes it's gonna be like a cross. All right. When it is like a cross, it means the closing and the opening is not that the same, because a cross is not equal. But when it is a plus, it shows that the power of the up and the down is equal. All right. So the doji can be in a form of a cross, or it can be in a form of a plus. It is still a doji. Okay, it is still a doji. All right. Yes. So let's go to the types of dojis now. Let's look at types of dojis. Let's look at types of dojis. So you can see that something happened here. Something happened here after the doji appeared. That's why I said sometimes it may be indecision. The market is still deciding which direction it should go. All right, which direction it should go. So the appearance of a doji, you need to watch out. You need to watch out. Okay, especially where is it forming? I told you about these two lines. About these two lines. support and resistance. Okay, so check out where the doji is forming. Is it at the top? Is it at the bottom? When the market has gone up or the market has come down? Okay, so that you are able to find out what might be the next move of the market. Because sometimes dojis can just form anywhere in the process of the market. Okay, sometimes dojis can form anywhere. Okay, but for the doji to have significance, I want you to mark where is it forming. Where is it forming? That is the point that I want you to take. All right, so let's come to this type of a doji called a dragonfly doji. I think we're gonna end here. I think we're gonna end here because of time. Okay, let's look at a dragonfly doji. So the dragonfly doji, it is a bullish candlestick pattern. It is a bullish candlestick pattern. It is formed when the open high and the close, they are the same or they are about the same price. When I say the open high and the close, what do I mean? Maybe someone is getting confused with the language. The open high and the close. Where is the price opening here? When something is like this, can you see the lower shadow is longer? Can you see the lower shadow is longer? Here there is no shadow. Sometimes you're going to find that there is a shadow here, a small one, which is short, but the down one is longer. Okay, so I told you what does shadows signify. So when I say open high, I'm simply meaning where the price opened, okay, it happens to be also the high of the market, how high price went. Okay, so the opening price and the closing price, they are almost at the same. Sometimes there will be a small difference here. Okay, so a dragonfly doji, it is a bullish candlestick chart pattern. First thing to take note of, when we say dragonfly, there is some sort of flying that is going to happen in the market. It simply means the market has been going downward. Now it's time for the dragons to what? To fly high. Yes, that's why we are calling it a dragonfly. When you see a dragonfly doji, please prepare your crypto bag. We are going to collect some money from the market. When you see a dragonfly doji, make sure that your crypto bag is ready. We are about to start collecting. We are about to start collecting. So it is a bullish candlestick that signifies market reversal to the upper side, meaning market has been coming this way, reaching our support area. So around this area, you are going to see the formation of a dragonfly doji. That signifies that the market might change direction to the upper side. A reverse is going to take place. Okay, so this is the characteristic of a dragonfly doji. Mostly you are going to find that it is having a long lower shadow. A dragonfly doji, one of its characteristics is that it is having a long lower shadow compared to the upper shadow. Okay, so I said already that long lower shadows signifies pressure in the market. Long shadows, let me just say long shadows signifies pressure in the market. So when the shadow is down, it means it is buyers that are pushing the price. When the shadow is up, which is longer, it means sellers, they are the ones that are pushing the price down. Are we together? But shadows signify pressure in the market, especially when it is a long shadow, signifies pressure in the market. So this is a dragonfly doji. When you see it, please take note that the market might change direction anytime to the upper side. The market might change direction anytime to the upper side. It may not change immediately, but it may change direction. Can you see the market was trending downward? Okay, now sellers, they are tired. They need to rest. They have been pushing price downward. They are tired now. They are reaching what we call the support level. Since they took it from the resistance level, they are tired now. They need to rest. They have reached the oversold area. Now it is for time for buyers to come in and buy low so that they can sell high. That's how a Dragonfly doji looks like in the market. Are we still friends? Are we still friends, guys? Are we still friends? Are we still friends? If we are still friends, give me yes. If we are still friends, give me yes. If we are still friends, give me yes. A Dragonfly doji. We are going to end on the Dragonfly doji. We're gonna end on the Dragonfly doji. What did we say about Dragonfly doji? What did we say about Dragonfly doji? What did we say? What did we say about Dragonfly doji? What did we say? What did we say about Dragonfly doji? What did we say? If we are still friends, what did we say about Dragonfly doji? It is a market reversal signal to where? It's a market reversal signal to where? Thank you so much, honesty. It is a reversal signal to the upper side. It's a reversal signal to the upper side. When you see it, watch out. Yeah. Just stand somewhere and get ready. Make sure that your strategies in TradingView, they are already set so that you can click the start button. Yes. So get prepared when you see a Dragonfly doji, because the dragons, they are about to fly with the market. The dragons, they are about to fly with the market when you see a Dragonfly doji. Bullishing. Thank you so much, Hamza. It's about bullishing now. It's about bullishing. Anyone with a question? Anyone with a question? Anybody with a question? Anybody with a question? Anyone with a question? We are ending here. Anybody with a question? Yes, yes, Ramses, yes. When you see it, prepare your crypto bag. Thank you so much, Ramsey. All right. Yeah. When you see it, prepare your crypto bag. All right, because we are about to fly with the price. We are about to fly with the price. So tomorrow we are going to proceed from here and then look at the opposite of a Dragonfly doji. If dragons have finished flying, what is going to happen next? If dragons have been flying for some time, what's gonna happen next? So tomorrow we're gonna pick it from there. JJ, ask your question. I've allowed you to unmute. JJ.
Yes, thank you very much, sir. At the start, you told us you asked a question about a long upper wick and a body, and then most people said it was buying pressure. Yes, I feel it is selling pressure. That's okay. Like buyers are taking over the market. Like when the upper shadow is very long, and then you confirm that it was the buyers who are in control. So I want clarity there.
Okay, thank you so much. Probably you did not get it. I said that price, they are pushed by buyers. So when you see that the market went high up, who pushed the market first? It is buyers. When price go up, it is buyers who have pushed the price high. Now, for you to see the presence of a longer upper shadow, okay, for you to see the presence of a longer upper shadow, first it is buyers who have pushed the price high. They have created what we call a high in the market. All right. So when the market has gone high up, probably one reason or another that we may not know, buyers comes in, sellers comes in. They started to sell, taking their profit. When they are selling, you see that they are creating a longer upper shadow. That signifies selling pressure. That's why I said that longer upper shadow signifies selling pressure. Longer lower shadow signifies buying pressure, because buyers, they buy from the bottom. So if you see the longer upper shadow, it is for sellers. If you see the longer lower shadow, it is for buyers. The pressure is buyers that are pushing it up. But who created first? The one for the bottom, who created first, who pushed the price low, it is the sellers who push the price low. But the one that are pushing back to the opening, it is buyers. Did you get me, JJ?
Yes, yes. Thank you so much.
Okay. Simon, what is your question, please? Simon.
Yes, good morning, leaders and all the members who are online now. I have a question about the bullish engulfing and the dragon doji. The two, which normally push the market up when we are considering.
Okay, thank you, Simon. Bullish engulfing bar, it is a market reversal signal to the upper side, the same like Dragonfly. So I said that these market reversal signals, they are divided into two, because we do have two players in the market, which is buyers and sellers. So if it is buyers that are in control, then they do have a language that they are using. That's why we are calling them bullish. Okay, so a bullish engulfing bar, it is the same in terms of their significance. I'm talking of their significance. A bullish engulfing bar, it is the same as a dragonfly doji in terms of what do they mean in the market. Is that okay, Simon?
Yes.
Yeah, so don't get confused. When we say a bullish engulfing bar, it is a reversal signal to the upper side. Dragonfly, it is also a reversal signal to the upper side. They are two different powers. Okay, they are two different categories. I mean, not powers, but categories. But all of them, they signify price going up.
Thank.
Is that clear now? Okay, I think Simon is clear now. All right, so guys, let's call it a day. We are going to meet again tomorrow, same time, same platform. Yes, I hope that you are picking one or two things each and every day, because we'll be going deeper and deeper into these languages that we are speaking, that we are learning here, so that you become a better trader. You don't just enter with your royal queue, but you enter at the right time, and you also exit at the right time, understanding that no, this coin has been pumping. It is time for me to leave this coin, because anytime, remember, when a coin has pumped, yes, anytime it can drop. So you need to read the language that will tell you that indeed there is still power or buying pressure that's going to continue up. If there isn't, what are you going to see? That's why we are defining these types of market reversal signals or candlestick chart patterns. Thank you so much, guys. See you in the next Zoom. Bye bye.